Hello viewers, students and friends. This is Dr. Kashinath Neharkar, Assistant Professor Sri Shivaji Law College, Parvani, and I welcome you in my YouTube channel, Law Education Volunteer Dr. Kashinath Neharkar. Friends, in this lecture we are going to discuss the concept of basis of charge of income tax and concept of total income. Friends, these two concepts are very important for the purpose of computation of income tax of any person. So friends, before you start, let subscribe this channel and press bell icon to receive further notification. So friends, we must start today's lecture. Firstly, we are going to discuss the concept of basis of charge. Friends, the income tax is nothing but the tax on the income which is earned by a person. It is a tax on the income which is earned by the person, and therefore the Income Tax Act 1961 provides for the basis on which the tax is imposed upon income of person, and that is helpful in computation of tax liability of person. So let me see what is the basis for tax. Basis means the criteria. Basis means the base on which, or it is a criteria according to which the income tax is imposed upon the income. So there are certain bases. Basically, section 4 of Income Tax Act deals with the basis for tax. It is a charge for income tax. It runs as a charge for income tax. So according to section 4, these are some important guidelines that must be considered for taxation purpose. First basis for taxation of income tax is the income tax is imposed upon income of person. This is the tax upon income of person. In earlier lectures we have discussed what is the concept of income, and according to that, income means something that comes from outside, and when that person earns the income during that previous year, that will be taxed as per the provisions of income tax, and that is the tax upon income of any person. Person means all those individuals, artificial persons like company, partnership, firm, body of individual, association of persons, etc. All such persons are liable to pay tax. So when they earn the income, then a second base for taxation of income is income tax is tax on annual income. So the income tax is taxed on annual basis. Fall, it means that person has to pay the tax on whole income which is earned by that person. The third base for imposition of tax is imposed on the basis of a residential status of person. Again, you can find out the lecture on residential status from my YouTube channel, and that will help you to understand what is residential status. So before computation of tax liability of any person, you must know what is his residential status, whether he is a resident of India or whether he is non-resident of India, and accordingly his income will be taxed. Because in case of resident of India, his income, whether it is received in India, whether it is earned in India or outside India, that will be subjected to tax, that will be considered for the taxation purpose. But in case of non-resident of India, his income that is earned in India only will be considered for taxation. So the tax is imposed on the basis of a residential status. Then another important criteria for taxation is the tax rate shall be provided by central government before commencement of financial year. every year in budget session tax rates are provided. Tax rates means existing tax rates may be continued or even some slight changes can be done, but that will be done every year, and according to that tax rate the tax liability will be decided. And lastly, the tax is imposed on aggregate income of person received under different heads. As you know, Section 14 of the Act provides various heads. So, firstly, the income of each head will be calculated, then the income of all head will be aggregated, and then the tax liability of person will be determined. So, this is the base for. Now, friends, we must understand the total income concept of total income under section 2 clause 25, as section 4 provides. In the previous slide we have discussed the income of the aggregate income of person is considered, and for that aggregate income is nothing but the total income which is defined by section 2 clause 25. So let me see what is the definition of total income which is provided by section 2 clause 25. And according to this definition, total income means the total amount of income as it is referred in section 5 and computed in the manner laid down under this act. So you must remember the manner and method of computation of total income is integral process. You should remember. So if you want to compute, if you want to determine the tax liability of any individual, therefore you should go through section 2 clause 45, which is basic definition of total income. You should go through section 4 of Income Tax Act, which provides for the basis of charge. You should go through section 5 of the act, which provides the manner and method according to which the income tax income will be calculated, tax liability will be calculated, and you should go through section 14 of that act, which provides for the computation of total income of person from different heads, that is income from salary, house property, business, capital gain, other sources, etc. And section 14 further provides how the income from each head shall be calculated. So the manner and method for computation of total income itself is integral part. So let me see what is the scope of income which is provided by section 5 of that act, as section 2 clause 25 makes reference towards section 5, which provides for the scope of total income. And according to section 5, the total income of any person in a previous year includes all income. See, the total income of resident, firstly, the first part of section 5 provides total income of resident of India in a previous year, and that includes all the income which he received, resident of India person received during previous year. All the income, whether it is received in India or whether it is received outside India, this will be his total income. And secondly, in case of non-resident of India, all his income which is received in India will be considered as his total income. So these two things must be remembered, that must be kept in mind. First one is, in case of resident of India, all his income whether received inside the India or outside the India, it will be his total income. And in case of non-resident, his income which is received only within the territory of India, that will be considered for the taxation purpose. Now we must see what is the scope of total income, what is the total income under section 14 of that act, how section 14 provides for the computation of total income. And according to section 14, all the income shall be classified under these heads. So a person may receive from one or two or more heads. The person may receive income from one or more heads which are provided by section 14, according to which his income will be calculated. See, such sources or such heads are income from salary, income from house property, income from profit and gains of business and profession, capital gain, and other sources. These are the 5 sources from which person may get the income. So according to, by consideration of these 5 heads, his income will be. So let we understand how the net income will be computed for the purpose of taxation. So section 14 of the act provides the manner and method according to which the tax liability will be considered, income tax liability will be determined. See, firstly, section 14 of the act provides for the computation of total income, and here we are going to discuss how the net income will be computed for the tax liability. See, firstly, the person's income from salary will be determined. If he receives the income, then it will be considered. Then his income from house property will be considered. Then his income from business and profession will be considered. Then his income from capital gain will be considered, and lastly his income from other sources will be considered. You must keep in mind that the person may get income from all of such sources or may not get. He may get income from one or two heads. It means if that person is salaried person, that person may get income from salary and he may not get income from house property, profit and gain, capital gain, other sources. In such cases, his income from salary will be in an amount, and his income from house property, profit and gain, capital gain, and other sources, that will be in a zero. The sum that is such sources will be considered as a, so it depends upon whether that person is engaged in such activity or not. Depending upon that thing, his income will be dependent from other sources. So the person may get income from all of such sources or may not get the income from all of such sources. It is not necessary that person shall get income from all the sources. Then he, after consideration, after calculation of income under each head, then all the income will be aggregated together. So that will be the aggregate total income, or that will be the gross total income. By getting all the income together, that will be the total income of that person. That will be called as a gross total income of that person. Then from that amount, the deductions which are available under section 80, if that person avails deduction under section 80 of Income Tax Act, that lump sum amount up to the prescribed limit provided by section 80, see whatever the chapter that provides, that amount will be deducted from total income, and then what remains, that will be considered as his net total income, and on that income the tax will be imposed by consideration of applicable tax slab, applicable tax rates. So friends, these two concepts are very important: basis for imposition of tax and the computation of tax. So you must keep in mind this chart, according to which the tax liability of any person can be determined. So friends, if you like this video, please share it with your friends and make the comments in the video, and do not forget to subscribe my channel. Thank you friends.